Tribeca Trade Group, and this is your end of market, end of day and end of week market recap. Yes, it's been a long week. Certainly an interesting first week of 2024, and the goal of this video is to give you a little bit of perspective, some things to watch for next week. And just kind of an overall feel for what worked this week and what didn't work this week, as well as some of the takeaways. So that's what we'll try to work on in today's video. I'll also go over the performance for the week. And risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. A couple ways before we kind of dig into some of the themes is that a couple ways that you can get involved more with Tribeca Trade Group. You could go to our Substack feed, which I'm actually doing something different this year. You can kind of for very super part-time traders who just want a glimpse of things that are going on. You can go there. That's the first thing. Let's just see if I can bring this up really quickly. I was sending a lot of jokes today. Sometimes I do that on Friday, but you can just go on Twitter and here's the Substack report, and you can get 7 free days. Also, if you want to go, if you want to see what's going on in our trading room, go to tribecatradegroup.com and go to our services tab to sign up there. All right, so let's get into first of all today. We did have so let's talk a little bit about today first. And here's the economics. There was a lot of this was the day that we had the most economic data. We had a couple other days too where we got things like ISM manufacturing, which I thought were interesting as well. But I think what was interesting is the jobs data, to me, wasn't the most important thing. I was wondering how that was going to shape up for the day. Let me explain. Well, first of all, there's the jobs numbers, and they were a little bit higher than expected. But I really kind of think this data is splitting hairs, because what they're doing is okay, the numbers beat expectations, but then they're bringing down the previous month. So we had the same thing last month, I believe, where the previous month negated all the gains from this month. So overall, it's really not that big of a deal. The one thing that I thought was the biggest deal of the data points is that average hourly earnings, which is another gauge of inflation, ticked a little bit higher. Did it tick way higher? No, but 0.4 is a little bit of inflation there. So and that is comes up in components of inflation. By the way, we'll get, if you looked at further down on your screen, next week, which is something to watch, because these markets, they like to really move on the CPI data as well as the Fed days. So I know some people, they just like to trade the price action and think that everything is contained in the price. Okay, that's fine. But if you look back at the last month or two, some of the biggest market moves have been on these days. So you could pretend like it's not a factor. I get it. It's fun to do that. But if you go back and if you look at what happened last Fed day, as well as the last CPI data, I believe those were the two biggest moves, without looking and double checking. But I believe if they weren't the two biggest moves of last month, they were up there, and those 2 days were two of the top 5. But I'm pretty sure that they were the two biggest moves last month, was when the CPI data and the Fed meeting. So listen, I'm not a fan of that either. It's tough to trade events like that, but it is what it is for now. So they are expecting 0.2 for the CPI, and then we'll get the PPI the following day. I mentioned the ISM data. This was interesting because, as we know right now, the bad news is good news for equities. You show lighter or a little bit weaker data, and this, the ISM, by the way, is a leading indicator, both the manufacturing and the service. So this came in much weaker than expected, 50.6 versus 52, and a couple of these other data points. Look at this, 43 versus 50. I mean, really, that's really weak. A reminder that anything above 50, so even though it's less than expectations were, it's still expansionary. Anything above 50 is expansionary. Anything below 50 is contraction. So keep that in mind. Now, the other thing I mentioned, that the bad news is the good news. Well, what do I mean? Okay, well, it's really, everybody is very fixated on what the Fed is going to do. Notice that most likely January won't be a major event, right? They're not anticipating much, but people are really starting to speculate in March, even though that's to me a pretty far ways away. But there's a 64% chance that they are going to cut interest rates. That's what the market is pricing in. Why is that important? Well, it's important to know what the market is pricing in. It may not necessarily be correct. And if that's not correct, then the market is over implying that they're going to cut interest rates, right? And that'll have to be reconciled. What does that mean? What does it reconciled mean? Well, if some strong data comes in and the expectations go from 64% chance to maybe 20% chance, that means the equity market is probably going to go down a little bit, right? That's how we kind of figure these things out, and that's how traders kind of operate, is just knowing what some of these moves could be, right? And what the effects of good news and how that affects things like not only equities but the dollar as well as interest rates. Let's talk about that first. I feel like I've been mentioning a lot in the trading room this week that, for a couple of months, we really didn't have to talk too negatively about what the dollar was doing or what rates were doing, because rates moved down for those 2 months. But this week is the first week in a while that we've had to actually say, "Ooh, geez, look at this move in interest rates," and "Oh, geez, look at this move in the dollar." So and I hadn't mentioned it in any of these end of day videos, but here's the market performance for the week. You could see, the dollar, did it go up to, this isn't a huge move, but it's a little bit of a change of what we've been seeing. And we'll just use the dollar index here, right? Here's what the dollar did, right? It moved up a bit. Right now, I don't think it's really changing the trend. And we could even look at this on a weekly bar too. But it bounced this week, so it's something to keep an eye on, right? I don't think it's that alarming, a 1.2% move. Again, considering the move that we've had over the last couple months, sooner or later we were going to get an up week for the dollar. Now, look at what TLT did as well. All right, so TLT, and this is the weekly, right? So it moved down a little bit. Now, again, we've got a new valuary for this year. So far, the price is inside. I think what we're going to want to see, or if we don't stay inside this valuary, then we're going to have some problems, most likely, right? And that level is 93.88. When I say problems, volatility will probably pick up in the equity market if we see a bigger move than what we're seeing right now in rates. But I think that we could still move a little bit before we really have to worry about things. But if you're a member of Tribeca Trade Group, you will hear me talk about, what's going on in this, what's going on in this market today. TLT was down another 1%. Also notice on the daily chart, you've got 95, right, is something to watch. So again, this is different. I haven't, for a couple months, if you were watching my videos back last year, I would often lead off with what the bond market was doing, what TLT was doing. But you really didn't hear me say that too much in November and December. Like a lot of times I skipped what bonds were doing in some of the end of day videos. So as Yogi Berra used to say, it's deja vu all over again for looking at bonds. So again, these are things to watch. So what else? So let's just look to see, now that we've got a weekly bar, let's just take a look. And I mentioned this earlier in the week, and I'll just gloss over this really quickly. We're not really going to gain too much here from looking at the weekly bar here in S&P futures, because we're so far above the value area. The Qs, on the other hand, did close inside the value area. So this could trigger the bearish 80% roll. I talked about this not yesterday, the other day. This is just for now, just basically like dipping your toe into the water. The price is just dipping in here to the value area. So I'm not concerned about that yet. What I would be watching for next week, we had a little bit of a bounce today. Qs broke the streak of down 5 days in a row. But we're still below all these short-term moving averages. So even though the price action was a little bit better today because we hadn't seen a positive Qs day in a while, that's still not the best looking candle. And it's not really convincing to me that we're done going down in the short term. Again, I say short term, right? You kind of just have to understand that right now. We did have, I don't know, what was it, 8 weeks in a row of gains. So it is quite normal for us to kind of come in a little bit. And I don't think it's so far it's that big of a move. And if you look to see where there's support, which is 390.90, and as well 388.07, that lines up very, very closely with what I'm seeing on the 1 hour chart. Right. Notice we tried to really kind of reverse the trend, but we weren't able to do it, right? That lines up very closely with 387.87. This is not that far down here. So like, that's why I'm not that concerned, because we're already like 2/3 of the way down here. And if like, so you kind of have to take the negative with the positive. If price action does continue to float or drift or leak down to those levels, what it will do is just take some of that more complacency out of the market, and it will wash some of the that super bullish sentiment that we got. So it might really shift things up. So I don't think that's the worst thing in the world to do if you have a little bit more than a very short-term time frame. If you're thinking more for the month or for the next couple months, let the market come in a little bit. Just try not to get caught up in it. That's the main thing, by the way. I don't know if I mentioned it to Tribeca Trade Group members, but I heard on Twitter a couple people say it, and I apologize because I don't know who it was, but they were saying that what retail traders do, unfortunately, a lot of traders can make money when the market goes up. What a lot of traders have a hard time doing is keeping the money once we start going the other way. So in my opinion, the more stubborn you are, like the longer this goes on for, right? The more that you really have to pay attention to your risk. As always, you always have to be a risk manager first, right? We all want to make money, and that's obviously a goal, but you have to really worry about your risk and your the downside. So if this continues to happen, the goal is really not to give back too much of what you made last year, right? So and another positive I would say too, right? Crowdstrike, which I actually added a little bit to my position today. But remember, I didn't think that the last week or so of December was that great in terms of a lot of these names. We really saw that dash to trash rally, right? A lot of names that were in big downtrends saw moves up. That's not my favorite type of trading. Maybe it is for you, but it's not for me. But a lot of names like this that were kind of consolidating, right? For, really didn't do too much, right? It got really boring in these things. So I think it's good that you have, notice what Crowdstrike is doing for now, right? So, and this is always the decision that the market webs give you, right? It's like, okay, I could add a little bit of risk on the dip, right? But if it breaks 242, right, then I'm out, right? Because then we might have something, worse going on there. But again, notice that the support is very close by, right? And for now, giving it the benefit of the doubt, it closed right at these moving averages. Not perfect. Would have liked to see that more, but anything could happen from one day to the next. What else did I want to go over in today's video? Just the performance, I think. What did well today. Oh, I was going to update this, but I didn't. Sorry about that. That's not done. It's Friday, so you have to bear with me a little bit. The home builders actually, I was looking for things today, as I was looking for things the other day too, to kind of provide some type of relative strength. Interesting that ITB basically filled this gap. It didn't close above its 5-period moving average, so this will be a must watch, I think, for next week, because this is one of the strongest areas of 2023. It's had a little bit of a correction. Normally, things that are super strong, if they are going to stay super strong, they can have a check back, but you don't want to see them have too deep of a pullback, right? The shallow pullbacks are indicative of strong areas of the market. Another area that I was watching today, and I actually tried trading this today, but I kind of gave up on it, which was the semiconductors. I made a trade earlier in the day. I'll show you my trade blotter. I don't know, by the way, if anybody who does this, who shows people their trades like this, but I do it because I don't know, to me it's pretty easy to do. But I traded a little bit of AMD today. That was on my radar today. I didn't stick with it. I think AMD went up to like 140. But it didn't close on the highs, but I could have gotten a little bit more juice out of it. But I really wasn't sure how today was going to unfold. And so what I did was I took some quick profits in some things. I thought that we could get a little bit of a bounce. We did, and I'll just mention the S&P chart in just a second. But I switched over from AMD. And again, I didn't make any major money in this trade. It was just kind of a scalping type thing. And I said, okay, let me move over to SMH because I think it's slower moving, and the way that this market has been whipping around, right now I'd rather be in something a little bit slower, right? And if the market is more constructive, then I can go with something faster. So it's a little bit of an adjustment, but this didn't really do what I wanted it to do, and you can kind of see what I did. I took a very slim target just to get something off for a profit. Somebody like that, I guess. Oh, yeah, I mean, this is a ridiculous small profit, but again, you just don't know what you're going to get because, 2 hours later, I had to take the trade off, right around the cost basis. And you could see it really didn't do much for the rest of the day. So again, this will be something to watch for tomorrow. It's got some, it could slip just like we talked about the Qs. They could slip down here, right, and take this out because right now it's below the short-term moving averages. Why am I focused on those short-term moving averages? Because it tells you a little bit about momentum and it tells you a little bit about strength. Below those short-term moving averages, I tend to back off. Right, we regain those moving averages, I tend to get a bit more aggressive. All right. So I was going to mention NVDA, which had, this was a strong stock today. However, look at what's going on. So I was talking about whether I've been looking at the stock the last couple of days, but it's still not out of the range, right? And you could guess all that you want. And if you're a long-term trader, it probably won't matter too much for you. But if you're trading more in the short term, I want to see this thing begin to kind of break out of the range that it's been in and start to move out of it. And that's 500, right? Because I don't mind having, catching, a few, little moves like this. What I would be looking for is whether it does this, right? So I don't have to be early here, right? I'll wait until it breaks 500 and then I'll begin to, go into it. It's very much like I mentioned this on Twitter, and I don't know if anybody really got it, but I said I will take the Darvis approach, right? It's kind of how our indicator works. If you've read that book, the Darvis boxes. And I think the name of the book is How I Made $2 Million in the Stock Market, right? It talks about that method of waiting for names to go from one range to the other, right? We do that with the market webs, and it is much more particular because we're looking at statistics, right? We're looking at volume at price to get us those boxes and that range. So in any event, it's definitely on the radar, but I'm going to be watching it more than anything until we get above that 500 level, right? Because it's been staying in this range now. You go all the way back to when it basically hit this level, right? This was all the way in August. We're talking about just almost 6 months ago, right? That NVIDIA really hasn't done anything. Now I know it's tough to say something like that because NVIDIA was up over 200% last year, but it made all the gains in the first half of the year. The rest of the year, it didn't really do anything. So again, sometimes I'm a little bit too short-term focused, but you could argue 5-6 months isn't really short term. So in any event, I'm waiting for it to go higher. I mentioned that I was going to go through the S&P, right? We're in this little bit of a pattern for now. And you can kind of see these things on the 5-minute, right? Sometimes people are like, oh, why are you looking at the 5-minute chart? I don't really care what happens. Yes, true. If you're again, if you're a little bit longer term, but you can spot patterns and you can spot when things change. For example, take a look at what's been happening here, right? Every time this S&P has tried to rally this week, it's been met with, and it sells off right at resistance. And this is really short-term resistance stuff, but it just shows you that sellers for now are in control. Here's a 5-minute from a couple days ago, rejected. 5-minute here, rejected. 5-minute here today. At least we hung around here a little bit longer and we didn't completely collapse at the end of the day. But notice how there was another, right? So here's the break of the value area, right? Retest, fail. Right now, we did come back at the end of the day, but kind of not exactly the same as yesterday, right? But here's the thing: we broke the value area yesterday, retest, fail. So the sellers have control. Now, the buyers did a little bit more battling today, but right now there's just more sellers, right? And we can't control that. We've got to wait until the selling kind of dries up a little bit. Notice, by the way, the 5-minute VPOC reversal, not bad. All right, so other observations really quickly here. Healthcare was the strength. That's what I spent a lot of time trading this week. The last chart that I'll show you in before we kind of wrap it up for the weekend is the XBI. I think this look at where this thing toyed around with me all week long. Of course, it's already had a nice move from the lows. There's no doubt about it, right? But the question is it going to break out of this sideways pattern? What do they call this? Stage one, right? I think it's in stage one. Will it go into stage two, which is breaking out of this range? And look at where it closed for the week, right? Almost like a doji. 89 is the top of value for the year, right? That's the new value area. Pretty slim. That's what gets me excited about this, or why I'm so interested in this, is you've got a pretty slim value area. All right. And notice that we closed, it was weak this morning. It was the weakest sector to open up. It was down over 2%. I know because I'm long this. I decided to buy a little bit of it. Yes, just a starter position yesterday, but it was down 2%. I said, well, we'll see where it finishes for the day. And it did finish back above 88. Now, it could easily fall back into the value area on Monday. But for now, I'm giving it a shot and saying, hey, let's be a little bit patient with it. All right. And so that was the one other chart that I wanted to go through with you guys. Let me just go back to that performance for the week. Oh, by the way, this is 5-day performance. It's not just for the week. Bloomberg likes to just go back 5 days, but yeah. So healthcare outperformed up 2%. That was really the star, even though that's only up 2%. Still outperformed. And then you had other defensive type areas of the market: utilities, energy, staples. The financial eked out a gain, but if you look further down in the leader section, there was these groups that were down 2%. Again, a lot of that is from last week because the banks actually did okay this week. And then again, look at the 5-day performance. Solar, just continues to lag. That was a big lagging sector in 2023. So far is a lagging sector in this year as well. There's the semis and retail and tech that were also lagging. So all of these things, we'll revisit next week. We'll keep our eye on and try to move as the market does, right? I was really talking about that today in the trading room. It was like, hey, if it's not there, if there's not good opportunities, take a break, go for a walk, do something more constructive while this market is still making low, is in a short-term pattern of making lower highs. It will eventually change, but we don't know when it's going to change. So you just kind of have to wait for it and not get too caught up in price action that has not been great to start the year. But I remain optimistic. I think that we really got ahead of ourselves a bit towards the end of last year, and it's quite normal for us to correct. Am I worried about the Santa Claus rally that it didn't go up? No, I could honestly care less because I've never heard so many people talking about the Santa Claus rally before, and I think people front ran it a little bit. So we'll see. I think January will be more important to see if January ends up being a positive month. And the S&P down about 1.6% for the week, not too big of a deal. All right, guys, that is it for the end of week recap. Members will get a video from me and a new watch list to start the week. Have a great weekend, everybody.